The Federal Reserve just finished up their meeting, 2-day meeting, and just did their press conference. Verbs kind of changed a little bit within the statement, but nothing really new. They've acknowledged what we already thought they would acknowledge. TLT stock, TMF stock. The ETFs that trade off the interest rates are moving. The S&P 500 is moving. There's a little bit of a relief. And I've been saying for some time, start buying on TMF stock and TLT stock because I felt that the big moves higher were overdone. Since then, that I basically just called that little dip there. Great. Where do we go from here? There was another event that occurred today that might not have caught your radar. The federal government is spending way too much. They're in debt. We have a lot of reasons to think certain policies. They're basically taking in a lot less tax revenue, and the deficit is too big. There's paper everywhere. The 10-year Treasury has been pressured significantly, same with the 20 and the 30. What the Treasury announced today was that they're shifting some debt. Instead of trying to have their brokers or the dealers to deal with the Treasury debt sell all this 10-year, we're seeing a shift into the 2-year. And the reason why is because this 2-year will help service the debt. So before the Federal Reserve even hit, at 8:30 in the morning, we got a news announcement from the Treasury saying we're making a shift. Basically, there's too much paper, and that shift will relieve the pressure from that. That adds into the fact that the Federal Reserve is maintaining where they are. So TLT stock, TMF stock, buy on the dips. Been saying that for a couple weeks. That trade would have worked out for you. I've been selling puts underneath. Now, Friday. Friday's a different story. Unemployment rate. The Federal Reserve just acknowledged that they believe that the economy is more than just robust. They changed their verbiage in there. We just printed 4.9% GDP. That's too much. The unemployment rate printed last month 3.8% plus non-farm payrolls from the previous 2 months were adjusted upward. What are we going to get on Friday? This will shift everything. If we get another robust economic report, this could really take everything out. So what I've been doing is my puts that I sold on TLT stock, I'm going to be taking profits tomorrow. They're, of course, moving into the money in a different way, or moving out of the money. Going into Friday, I'm probably going to strangle TMF. I can get a pretty tight squeeze on that. In the meantime, there's other reasons to be buying on the dip for TLT stock. One of the reasons is simply this. What's your downside risk? How much higher will the Federal Reserve need to go? We're probably going to find that out on Friday, so I'm not really willing to call that too much. But if you are an investor, and let's call the 10-year sitting at 4.8, 4.75, and the Federal Reserve is forced to push short-term rates up another 25 or 50 basis points further. That would affect the 2-year. It will push the 10-year somewhat, of course, but within a 10-year period of time, the Federal Reserve would very likely lower interest rates. With that inverse relationship between price and yield, what happens next is if the Federal Reserve lowers interest rates, yields come down, price goes up. So anybody who's buying now on treasuries is basically buying near the bottom with the potential that there might be a small dip lower. That if you're holding on to this for, say, 2.5 years, the eventuality is you're going to be profitable. Assuming that the Federal Reserve can get inflation down to 2%, that geopolitical concerns don't train wreck everything. That's a variable that we're not really discussing right now because we don't know how geopolitical concerns are really going to put risk at factors. Okay, so you might be buying, say, TLT stock on the dip. I'm selling puts. Going into Friday, I'm going to be buying puts and calls, probably on TMF stock. But the long term, you're looking at the very bottom for this cycle, given the information we have right now. Let's jump into a couple charts. I want to show you some of the things I'm looking at, how the markets are moving. This is post-meeting. There's about 30 minutes left in the trading day. Let's jump in real quick. First off, here is some of the things that was said. I got this out of Reuters. Economic activity expanded at a strong pace in the third quarter. They changed that wording up a little bit. That was important. They acknowledged, man, this is hot. The Fed's latest statement noted that with job gains still strong and inflation still elevated, the central bank continues to consider the extent of additional policy firming that may be appropriate to return inflation to 2% over time. What's on the table? Higher interest rates. Higher interest rates will remain higher for longer. There may be more interest rates coming. That's the bottom line message you're getting. Here is the yield on, this is the 2-year yield. Far more sensitive to what the Federal Reserve does, because if the Federal Reserve pushes yields up high right now, within 12 months, they're likely to drop that. So the 2-year will be more sensitive to that. Here's the 10-year. And you can see that we did see some big pushes earlier. So much going on. The deficit, first and foremost, that's what this debt is. But the 10-year is also the benchmark for all investments across the board. With yield moving higher, of course, you're seeing stocks move upward. They kind of rallied a little bit on the information. In the meantime, before I get to that chart, here's a look at, this is actually TLT stock itself. Like I've been saying, going all through the end of October, this is too much too far. Buy on the dips. I've been selling calls underneath, or puts underneath. I'm just taking theta, letting them evaporate. I think we went too far, too fast. There's too much pressure on treasuries, the dealers, to sell this product. They can't sell it, so they're dropping price, pushing up yield. The shift that we saw today was pretty seismic, with the treasury increasing their 2-year. That will relieve pressure on the 10-year. So my puts that I'm selling underneath on my TMF stocks, the chances of them evaporating into zero have increased significantly. Probably going into Friday, though, I'm going to take a different tact altogether. I might just take my profits right there, but I'll trade something different going into Friday's number, because who knows what that number could look like. I think we start to see more pressure there, that it's just a continuation. And I've been saying this about TMF and TLT stock. More than likely, we start to move more sideways than anything. So these moves lower, to me, is an opportunity to step in, sell some puts continuously. I'm just going to keep doing that, because I think we're about where we need to be. The downside risk is small. And I've said that a few times. If you bought bonds right now, you're almost guaranteed to be sitting on profits at some point, assuming we get inflation under control. Stock market. This is a 3-minute bar chart on the S&P 500. And as you can see, the stock market is kind of finally seeing some movement upward. What'll happen Friday? I'm going into Friday in a completely different attitude. I didn't do anything with SPY stock today, simply because we need to know more information, and that starts on Friday. I'm going to keep putting out this kind of content. I know you guys really like these TLT stock videos that I put out. The ETF itself, trading off the interest rates, and we should see some sideways to upward movement on this if Friday is a decent number. We'll see how that plays out. Make sure you hit that like and follow button. Thanks so much for the comments down below. Follow the description down below in the description for the links to get to my website, dhtayloranalysis.com. See you in the next video.